Hey traders, it's John Fortune here with this week's Weekly Forex Forecast for the 4th of May to the 8th of May 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we highlighted the fact that the US dollar index has been coiling now for a couple of weeks, failing to make new highs and failing to make new lows. And that resulted in this coiling pattern. This was because of the two fundamental drivers of global demand for the US dollar pushing it to the upside, and also the injections of liquidity from the Federal Reserve pushing it to the downside. So we've seen this battle playing out in the dollar index, and it resulted in an eventual break to the downside, at least in the short term last week. As a result, we've had this breakout of this coiling pattern and we have made a new low. So going into this week, we would favor short positions in terms of US dollar. What we'd like to see is a pullback in the dollar, and any pullback in this area, this would be a great place to start to look for further declines to the downside in the dollar index. We are not trading the dollar index, of course. We will be just using this as a compass as we go through the dollar pairs. But this is the kind of price action we'll be looking for next week. And as a result, we'll be going into next week with a bearish bias. That is to say, we will favor dollar weak positions in the dollar pairs next week. So next market we're going to look at is crude oil. Now, last week we highlighted the 1920 or the 19.29, I should say, as an area to start to look for a pullback in this market. We have started to correct towards the 19.29, and as it stands, we're just simply viewing this as an A, B, C correction, and we would still favor short positions in crude oil only. Again, anybody new to trading, especially if you can only trade the futures, because the futures and the spot price are different. We went through this last week in last week's video, and you can actually just avoid trading crude oil altogether if you can only trade futures, because we may see some more wild moves coming into the crude oil markets in the June contract. So just bear that in mind if you are trading crude oil. Going into next week though, overall what we'd like to see is we'll be treating this currently as a C wave correction towards 1929. Any pullback in this area is going to be viewed therefore as an opportunity to start to look for bearish setups. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at 9.37. So next markets we're going to look at is euro dollar. Now, as we made that new low to the downside in the dollar index, we did break to the upside, of course, in euro dollar as well, as this tracks the US dollar index essentially inversely. So going into this week, we are now starting to see some direction after that coiling pattern, and we are focused on bullish setups in this market. We don't like to buy at the highs, so any pullback in this area is going to be viewed as an opportunity next week to start to look for bullish setups. And if we get the right kind of bullish setups in this market, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.1052. And if we can get a break through here, we're going to be looking up towards the next key of resistance, the upside and target 2 at the 1.1148. So the next market we're going to look at is pound dollar. Now, in previous videos, we highlighted the 1.22530 as an area to look for a bounce to the upside, and we turned at this key of support almost to the pip, and we've started to rally up towards the key of resistance ever since. Very simply put, going into this week, we are still looking for the target of the 1.2728. What we'd like to see for anybody not already involved is any pullback in this area, once again, is going to be viewed as an opportunity to start to look for bullish setups. And if we get the right kind of bullish setups in this market, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.2728. So the next market we're going to look at is US dollar Japanese yen. Now, last week we highlighted this coiling pattern in the US dollar yen, and we said we were looking for a breakout to the downside. We did get a nice breakout and a sell-off to the downside in this market. Very simply put, going into this week, we now sit below a key area of support from the past at the 107.380. As you can see, this key area of broken support has already turned resistance last week. So very simply put, going into this week, any pullback in this area, and preferably a retest of the 107.380, as this would give us better risk to reward setups down towards the target. Any pullback in this area is going to be viewed next week as an opportunity to start to look for bearish setups. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 105.86. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 104.62. So the next market we're going to look at is Aussie dollar. Now last week we were looking further advances to the upside in this market, and we did take out the first target set at the 0.6461, and we came very close to the second target set last week at the 0.6582 before this sell-off to the downside. Very simply put, going into this week we are still looking for further advances to the upside in this market due to that break lower in the dollar index. Any pullback in this area, and we can see we're already getting this pullback, any pullback is going to be viewed as an opportunity to start to look for bullish setups. And if we get the right kind of bullish setups in this market, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, the 0.6582. So the next market we're going to look at is New Zealand dollar. Now last week we actually reversed the upside as we made that new low in the dollar index. So very simply put, going into this week we are looking for further advances to the upside in New Zealand dollar. Any pullback in this area, we've started to get it, and any continued pullback is simply going to be viewed next week as an opportunity to start to look for bullish setups, bullish reversals in this area. And if we get the right kind of bullish setups in this area, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, at the 0.6195. So the next market we're going to look at is US dollar Swiss franc. Now last week we made a new low just as we did in the dollar index in the US dollar Swiss franc, and this means going into this week we are favoring short positions in US dollar Swiss franc. We do preference bearish setups in this market going into next week. Any pullback in this area back towards the key area of broken support from the past, potentially looking to turn resistance at the 0.97290. Any pullback in this area is going to be viewed as an opportunity to start to look for bearish setups. And if we get the right kind of bearish setups in this market, we start to break to the downside, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at a 0.9503. So the next market we're going to look at is US dollar CAD. Now last week we were looking further declines to the downside, and we highlighted a target of the 1.3926, which was right here. And you can see we did have a very nice sell-off coming, taking out this target before bouncing to the upside last week. Very simply put, going into this week, we are still looking further declines to the downside in this market. Yes, I know that crude oil has basically collapsed. This is negative for the Canadian dollar. However, as it stands, we are still structured to the downside in this near-term downtrend. And as long as we are structured to the downside, especially as we have a weaker dollar as well, we are currently favoring short positions. This will change as it stands if we break the 1.42630. This is when we would start to look for a potential break to the upside and a reversal. But going into next week, we are not in this area. So very simply put, what we'd like to see going into next week is we've already had a correction, and we're coming now to a key area of confluence, in fact, of this downtrend and also this 1.41520, which is broken support from the past, looking to turn resistance. Any pullback, further pullback into this area is going to be viewed as an opportunity to start to look for bearish setups. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.3734. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 1.3468. And last but not least, we have gold. Now last week we started to correct to the key area of broken resistance from the past, potentially looking to turn support here in gold at the 163614. As we start to correct down towards this level, what we would like to see is any further correction would be great, as this is going to give us better risk to reward setups to the upside if we start to reverse. But any pullback in this area down towards this key area of support is going to be viewed as an opportunity to start to look for bullish setups. And if we get the right kind of bullish setups in this market, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1763.05. So that is it from me for this week, guys. I just want to point out, going into next week though, we also have interest rate decisions on Tuesday morning around 5:30 a.m. UK time out of Australia, and also around 7 a.m. on Thursday out of the UK. So just keep those dates in mind because the relevant pairs may get volatile on those days. Apart from that, I just want to say a big thank you to everybody who has subscribed to the channel and who comments on the channel on a regular basis. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.